Welcome to today's Explainer. We're talking about the AI gold rush. Now, I want you to literally picture something for a second. Imagine waking up one morning, checking your portfolio, and discovering that your small startup is suddenly worth 10 times more than it was just a few short years ago. I mean, not just a little bump, we're talking a massive, life-changing, overnight multiplier. And here's the absolute wildest part. It's not because your profits exploded, right? It's not because you struck oil in your backyard. And it's definitely not because you magically fixed your underlying business model. Nope, it's entirely because of a tiny acronym, AI, artificial intelligence. Ever since ChatGPT dropped in late 2022, man, the world has witnessed literally one of the single largest waves of venture capital investment in recorded financial history. We're seeing investors pouring absolutely staggering billions of dollars into AI startups. And because of this, valuations are hitting levels that, honestly, used to seem completely impossible. We're living in a reality right now where companies are being valued at hundreds of billions of dollars before they ever even go public. It's a gold rush in the truest sense of the word. Okay, let's dive into this. Because seeing these astronomical numbers naturally begs a really serious question, doesn't it? Are these companies truly worth that much? Or are we, right now, watching another massive technology bubble inflate right before our very eyes? So today, in this explainer, we're going to explore this mind-bending rise in AI startup valuations. We'll break down exactly what happened to the financial landscape the second ChatGPT changed the world, and most importantly, we'll figure out what ordinary, everyday investors like you and me can actually learn from this modern-day gold rush. You know, there's just such a stark contrast between the world before and the world after ChatGPT. Think back to just a few years ago. AI was mostly, well, an academic thing. Sure, researchers were hyped, software engineers were geeking out over the potential, but out in the broader market, most businesses honestly had no clue how AI would actually make them a dime. Investors liked it, sure, but they treated it like any other standard tech sector. It was quiet, contained. But after ChatGPT, boom, millions of ordinary people suddenly experienced artificial intelligence for themselves. It wasn't locked away in some university lab or a sci-fi movie anymore. It was literally right there on our phones and laptops. The future had finally arrived in the mainstream, and you better believe investors noticed. To really grasp this massive shift, we kind of have to look back at how things used to work. In that before era, if you were a startup founder, you had to actually convince investors that your product solved real, tangible problems. Pitching your company meant your valuation was tied to familiar, grounded metrics. Investors wanted to see the receipts. What's your revenue? What's your month-over-month growth? They cared about your actual customer count and your clear, calculated path to turning a profit. It was a very pragmatic, show-me-the-money approach to valuing a young business. But then, the release of ChatGPT triggered what we can call the great repricing. When investors see a technological shift this massive, they don't wait around for certainty. No way. They race to find the winners. Money just started flooding into AI companies. And suddenly, every startup on Earth wanted to be associated with artificial intelligence. What we're seeing right now is pure, unadulterated FOMO, fear of missing out. Investors are terrified of missing the next Google or the next Amazon. Because of that, AI startups are commanding valuation premiums that are miles higher than non-AI startups at the exact same stage of business. You could literally have two companies with the exact same revenue, but slap an AI label on one and its valuation just skyrockets. Why? Because right now, investors are betting entirely on future possibilities, not current realities. And this brilliantly illustrates the sheer unprecedented scale of this phenomenon. $965 billion. That is the reported recent valuation of Anthropic, a private company founded just a few years ago by former OpenAI employees, following a massive $65 billion funding round. I mean, just pause and think about how extraordinary that is for a second. Historically, companies had to grind for decades, building physical factories, acquiring customers all over the globe, optimizing crazy supply chains, just to build a business worth a fraction of that amount. Anthropic hit this valuation in just a few years. Investors genuinely believe these new AI titans could literally become the operating systems of our entire future economy. Now, to wrap our heads around these numbers, we've got to look at the bullish argument these investors are making. Think back to the early internet days around 1995. Most folks couldn't see what was coming, but a small group believed the web would transform absolutely everything. And, well, they were spot on. Today, investors are viewing AI through that exact same lens. They're looking at massive foundational pillars of human life: healthcare, education, finance, manufacturing, software development, scientific research, the whole shebang. The argument is super simple. If AI becomes becomes deeply embedded into every single business process across all of these industries, the companies controlling those core AI systems are going to capture enormous value. If that vision actually becomes reality, the argument goes, then today's massive price tags might actually end up looking like a total bargain. However, history definitely provides us with some stark warning signs. Every single major technological revolution throughout history attracts two things: incredible innovation and incredibly dangerous speculation. We saw it in the 1840s with the railroads. We saw it in the 1880s with electricity, automobiles in the 1900s, the dot-com boom in the 90s, crypto in the 2010s, and now AI in the 2020s. Look, the technology in every single one of these eras was very real, and the opportunity was genuinely enormous. Yet, time and time again, investors still manage to wildly overpay. Why? Because they let the excitement over the shiny new innovation completely cloud their judgment when it came to actual business fundamentals. And that brings us to the AI reality check. Even some of the most famous, battle-tested investors out there are starting to question these sky-high valuations. Critics are quick to point out that the market seems to be assuming absolutely flawless outcomes for these startups, like perfect growth, perfect execution, perfect profitability. But let's be real, business is messy. To run these advanced AI models, companies have to burn through massive amounts of cash on computing infrastructure. We're talking incredibly expensive chips, huge power-hungry data centers, and armies of specialized researchers. Oh, and did I mention the fierce cutthroat competition? Yeah, at the end of the day, building impressive technology just doesn't guarantee impressive profits. So the crucial point is perfectly captured in the lessons we learned from the dot-com era of the late 90s. Back then, there was just massive excitement, soaring valuations, and money practically raining from the sky. Sure, some companies like Amazon and Google survived and became absolute giants, but so many others, they just completely vanished. The crazy thing is, most investors back then correctly identified that the internet would change the world. They were absolutely right about the future. But a ton of them still lost an absolute fortune. Why? Because they bought in at totally unreasonable prices. Being right about the future doesn't automatically make you money. You also have to be right about the valuation. And this is exactly where the mindset from the illiterate investor becomes incredibly valuable. You do not need to chase every single trend, and you definitely don't need to predict exactly which AI startup will take over the globe by 2035. Instead, you just need a grounded playbook. Step 1. Accept that while technology changes at lightning speed, human behavior really doesn't. People are always going to chase excitement, fear missing out, and wildly overestimate short-term opportunities. Step 2. Always remember that a great company isn't always a great investment. Price matters, valuation matters, expectations matter big time. And step 3. Rely on consistent investing over wild speculation. You don't need to find the next billion-dollar unicorn. Diversification, patience, and disciplined decision-making, that combo has created far more millionaires than speculation ever will. Right now, we are all standing at a massive crossroads, and billions of dollars are flowing down two very different paths. Road 1 is paved with hype, FOMO, and speculation. It's exciting, it's super loud, but as we've seen from history, it's often a dead end for your wallet. Road 2? Well, it's much quieter. It's paved with patience, discipline, and long-term investing. Look, artificial intelligence may very well be the most important technological revolution of our lifetime, or it might just take way longer to materialize than these hyper-excited investors expect. Nobody knows for sure. But the smartest investors, the ones who actually build lasting wealth, they don't get swept away by the crowd on Road 1. They stay curious, they stay patient, and they firmly plant their feet on Road 2, remembering that the ultimate goal isn't to own the flashiest asset, but to build a truly stable financial future. Which brings us to our final thought. I really want you to ask yourself, are you chasing the crowd's excitement, or are you patiently building long-term wealth? It is so easy to get caught up in this AI gold rush, but remember, you don't need a fancy finance degree to build wealth. You just need knowledge, a bit of discipline, and the willingness to keep learning. If you enjoyed this explainer and you want more simple, grounded breakdowns of investing, economics, and the invisible forces shaping our financial future, make sure to subscribe to Rene Pineda, the Illiterate Investor. Until next time, stay curious, stay disciplined, and keep building your future.